Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Friday, July 31st, 2009. The euro-dollar pair rose strongly in today's trading, especially after the pair broke above the 1.4150 level in New York trading. The euro was bolstered by risk appetite following the US GDP release that came in better than expected. The pair had bounced off the 1.40 level yesterday, which was a 61.8% Fibonacci retracement of the rally in this pair from July 8th to July 28th. Today's total move from low to high amounted to about 200 pips. Though the euro was higher against the dollar, it did slide rather sharply against the Swiss franc. After hitting a high near 1.53, the pair wiped out its gains from the last two sessions to fall back to support at 1.5210. European stocks did stumble in late European trading, which was the catalyst for the fall. Eurozone consumer prices were down an annual 0.6% in July, the biggest annual drop since records began 13 years ago. In a separate release, it was revealed that the unemployment rate in Europe rose to 9.4%, the highest level since 1999. Weak prices will keep the ECB on the defensive, though a drop in oil prices compared to last year is responsible for a lot of the inflation change. The two pieces of data will keep pressure on the ECB to keep rates low and accommodative. In the US, GDP declined 1% in the second quarter, while the first quarter's growth figures were revised down to show a 6.4% decrease. Personal consumption, which makes up about 70% of GDP, fell 1.2%, wiping away the gains in spending seen in the first quarter. With unemployment remaining a huge concern, while wages remain subdued, it is no wonder why the U.S. consumer is saving more, though that is limiting economic activity. The pound-dollar pair broke above an important level of resistance at the 1.66 area, jumping to set a new high for the week at the 1.6730 level. That broke the pair out of its recent consolidation action and retests the high for this year set at the end of June. The week now ends with a strong move above recent resistance, so it'll be interesting to note if we have a retest of the 1.6550 level in early trading next week. The dollar sank against the yen as well, falling back into its range for the week. After testing yesterday's high at 95.85, the greenback weakness in today's trade-in weakened the pair, dropping it to the 94.50 area. That ran up against an upward sloping line of support from July 12th, using the main lows we've had since then. The pair looks primed now to close the week pretty much where it started. In Japan, the unemployment rate rose to a 6-year high in June, and consumer prices fell at the fastest pace on record. The jobless rate rose to 5.4% from 5.2% in May. Consumer prices, excluding fresh food, fell a record 1.7% in June. Negative prices erode companies' profits, hampering the chances of a recovery. The Aussie-US dollar pair rose to a new high for this year as it reached the 0.8360 area. It managed to make up its losses from the middle of the week and looks ready to extend its rally that began in the middle of the month. Next week will be full of important releases, including services and manufacturing data for the month of July from several major economies. There will also be 3 central bank decisions from the Reserve Bank of Australia, the European Central Bank, and the Bank of England. Friday wraps up a busy week with the U.S. non-farm payroll report. And that wraps up our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com. And from all of us here at CMS Forex, have a great weekend.